DeFi's in a tailspin. Many tokens are down by at least 18%, ending the year on a sour note for investors. But one project attempting to combat this is Yearn.Finance. They recently announced changes to their tokenomics that may turn it into a black hole for their own token, a change that could lead to the next phase of evolution within the entire DeFi industry. So let's break this down so we can make better sense of the proposal and understand the scope of this opportunity. This video, by the way, was not sponsored by Yearn and is not financial advice, so please do your own research before you throw your money into anything. Also, let's go ahead and run a grid trading bot on the Yearn.Finance token. That way we can track and see how it does at the end of this video. We'll click create bot, grid trading. We're gonna do $1,000 for this investment. All right, leave the AI parameters, create, okay. And we're good to go. Now let's cover the basics. Yearn is a DeFi protocol. The protocol was created by Cronje in early 2020, before yield farming as a concept was plastered on every DeFi website's banners. The thing Cronje wanted to make was a way to automate the strategy he was personally using to find the highest earning lending pools. This led Yearn.Finance to build out functions for earning money. The first is aptly named Earn. This is a yield aggregator that shifts between other protocols like Aave, Compound, and Curve to get users the best yield. Investors use Earn to deposit their stablecoins and let the algorithm do the hard work of rebalancing investments between those protocols, effectively saving users the time it takes to hunt down the highest yield. When users invest, they get back Y tokens, which kind of act as a receipt that represent the amount of money they have invested. For example, if you deposited the stablecoin DAI into the Earn program, you would get Y DAI in return. Then we have Yearn Vaults, which employ more complex and arguably riskier strategies to get you potentially higher returns. Here, the invested money goes into yield farming strategies, sometimes with multiple steps that can generate liquidity provider rewards or LP rewards, transaction rewards, and other gains from DeFi pools through the Ethereum ecosystem. There are many of these vaults available right now on their site. Here's one, the Curve IBKRW liquidity pool. It's gonna look a little bit confusing, but I promise it's not that bad. In this pool, holders earn fees when they deposit synthetic Korean won to a Curve liquidity pool. Basically, this pool supplies the synthetic tokens to Convex Finance to earn CRV and CVX rewards, which are then traded for more synthetic tokens to invest back into the strategy. So it gets pretty heady pretty quick trying to understand how these strategies work, but the great thing is that protocols like Yearn make executing these complex trading and reinvesting strategies much more accessible because you don't have to understand each and every step, and it's much less time consuming for the average investor because the app does these steps for you. Something else that can save you a ton of time and headache is joining my Patreon community. There you'll find additional content, money-making strategies, a private community, coaching, and a whole lot more. It's an amazing deal. For as little as $10 a month, you can grab a spot linked in the description below. Now, YFI is the main utility token for the Yearn protocol, and as of now, it has a maximum supply of 36,666. Users of the platform earn YFI tokens by providing liquidity either to earn pools or in their vaults. An interesting thing about this token is there was zero supply at launch and no tokens were pre-minted or sent to investors for trading. YFI holders have exclusive rights to vote on proposed changes to the protocol or for vault strategies. And the prices for YFI have been astronomical because of this strategy. Many regard this as the first crypto token that has ever surpassed Bitcoin's individual token price. You can buy YFI on the open market today at a price of about $29,000 US, and this is up from recent lows of about $19,000 during crypto's downturn towards the end of 2021. But the proposed changes to Yearn caused the token to spike 85% in the week of December the 20th. To me, YFI is one of the most exciting DeFi tokens out there, especially with the potential revisions to its tokenomics. Four things are set to happen if this proposal gets approved. The first is the creation of a YFI vault. This will contain YFI that has been bought back from the market, reducing that total circulating supply. Users will be able to stake YFI and get X YFI in exchange. The additional YFI bought back by the treasury will increase the value of this liquidity pool for all holders of the X YFI token, that is the stakers of YFI. Now, buying back the YFI from the market would obviously require a significant amount of capital from Yearn.Finance, which the protocol now has thanks to saving initiatives implemented to hedge against the bear market. In their proposal, it was reported that Yearn has bought back roughly 300 YFI in the last year, costing around $10 million. Now, the second change to YFI has to do with governance, where users could then lock up their tokens for up to 4 years, with the longer lock period meaning the greater your share of rewards generated by the pool. And then to add to that, if you end up trying to leave the pool before your locking duration has expired, you'd incur certain penalties, part of which would be paid out to the other lock stakers, further benefiting them for sticking with their staking. The third change is a system involving newly created vault gauges. Depositors in this system earn rewards based on their VE YFI weight, basically their share of the total volume locked within this pool. How this works is tokens of the treasury are allocated to vault gauges based on weekly governance voting, basically another form of passive income on this site. And the fourth change is really just an announcement of what the proposal calls useful work features, tools that help VE YFI holders earn more rewards, putting more on the line for those who want to contribute to the Yearn ecosystem. So in summary, what's happening here is that YFI, a token that has been a bit stagnant for the last 6 months, could face a massive bump in scarcity as Yearn takes more and more of the token out of circulation. And holders of this token will be rewarded disproportionately for their willingness to be locked in the protocol for a longer period. So you can think of it as a 1-2 punch of reducing supply and rewarding long-term holders. Now, I do consider it my duty to also point out the risks. Even after this proposal could get approved, there is still the issue of governance attacks, where holders of the majority of YFI tokens can vote to approve policies that change the rewards users are eligible to receive. There's also the issue that user demand to lock up YFI may eventually fall. This would make holding locked tokens less attractive, as rewards for each holder would eventually decrease. The authors of the proposal say that minting new tokens would have to be considered at a later time if this were to happen, and that could drive the price of YFI down in the short term. It's important to understand worst case scenarios and only commit to YFI staking if you intend to stick out through your entire lock period, no matter how rewards might change. So based on a preliminary poll, it looks like this proposal has enough support to get passed, and it's almost certain that there may be some immediate price movements with a lot of upside potential for long-term holders if and when that happens. I've been running a trading bot on the YFI token now for 5 days, and the results are in, and they're pretty juicy because my timing for starting this bot was impeccable, and we're up 10.98% in just 5 days running this bot on the YFI token. This might be the best short-term bot results I've ever seen, and I'm pretty stoked on it. If you want to try out Pinex for trading bots yourself, I'll have them linked in the description below. But as with any investment in this space, I strongly recommend you do your due diligence and please only invest money that you can afford to lose. This is a very exciting space, but it's also a very new and volatile space where it's easy to make mistakes. If you'd like to check out a more user-friendly way to earn yield on your crypto, let me introduce you to a channel sponsor of mine, BlockFi. With BlockFi, you can earn interest on your cryptos and stablecoins with just a few clicks, and they have a crypto credit card that pays you cash back in Bitcoin. I'll have BlockFi linked in the description below. So that's going to do it for today. I would like to thank you so much for watching, and I hope you have a profitable day.